Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit homegain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to homegain.com.
Welcome back, everyone. I'm your host, Ryan Sloper. Joining me today is my guest, Cammarosano, the general manager of HomeGain. Quick reminder, Real Estate 360 is designed to build the Washington, D.C. Metro's housing and credit markets one house at a time. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is 877-245-2030. That's 877-245-2030. So with all this talk about, the banks and all the, bad investments they're making, I do want to point out that, right now is probably the best time in the world to be actually looking to buy a home or refinance your home. There's been basically a 15-month refinance boom over the last, year and a half, where the difference in which you're actually able to cut your interest costs is about 29%. So almost a third off of your mortgage and interest just in the last year alone. So, I don't think that there's really ever been a period of time where it's been a more opportune time for people to consider buying or refinancing. Louis, just to give our listeners an example of what's going on right now, in February of 2011, a $300,000 mortgage required roughly $296,000 in mortgage interest in a 30-year period. Now, as of May of 2012, that same $300,000 mortgage requires roughly a $207,000 in mortgage interest over a 30-year period. That's a savings of 29% if you were to refinance that mortgage that you took out a year prior. And basically that math is going to be pretty much the same amongst all loan sizes, not just the example that I just gave you.
And who would have thought that we've had that dramatic of a difference in just a year?
You and I were both wrong. We've been wrong on numerous occasions, thinking they weren't going to continue to go down. But I will say that, as long as there continues to be this manipulation of the markets, all bets are off for whoever's trying to figure out what rates are going to do. Every day that you wake up, something surprising could happen, and it wouldn't shock me if one day they just shot up to 5.5%, 6%.
Well, they inevitably will, because they are being kept down, but we're witnessing the power of the central banks to really manipulate and keep interest rates low.
Yeah, I mean, when you really think about it, what would happen if interest rates right now were at 6%? It would be absolutely devastating.
So that's why they're using every power they can to keep them down.
So, the real question I have...
Actually, that would be a good thing, though.
Sure, but you know what? The real question I have is that, okay, so there's a lot more potential for the rates to go up, right? But it's a lot less likely for them to continue going down, because if you've seen the nominal decrease in rate, even when all hell is breaking loose in Europe, I mean, we're maybe getting an eighth decrease in interest rates. So what is it going to really take for interest rates to go down to like 3%? Well, I'm going to say it probably is not even going to happen, because what will happen is the lenders they'll just take and give you these very incremental decreases in interest rate, and they'll take the profits themselves. They're not going to pass that on to you, the consumer, because what bank is going to want to give out a 3% fixed loan for 30 years? I mean, 4%, sub 4% is already pretty low. And I mean, you're talking about 15-year fixed that are down in the low threes. I mean, it's going to get to the point where, okay, you can't loan out that type of money. It's just not going to make sense. And all the more reason why you have these lending guidelines and restrictions on lending right now, because they want to make sure that they only have the cream of the crop borrower that they're lending to if they're going to lend at only 3%. So
they can't make money. They need volume. Just lending to the cream of the crop isn't going to make them much money.
Yeah, and they need to do volume, and they only want to lend to the best of the best, because they want to make sure if they are lending at these low interest rates that they're going to be guaranteed to be repaid. So they're really not wanting to take on that risk. So, ultimately, guys, what this really boils down to is that no matter whether you're in the market to buy or not, you need to call a professional to analyze your situation to see if you potentially could buy in the next 3, 4, 5, 6 months, a year, whatever it may be. But I always talk about being proactive about your personal financial situation. And, unfortunately, I feel like, you really need to start looking at your cost of shelter right now, because inevitably inflation's going to hit at some point. Now, is it going to be like right after the election, right before the election, a year from now, 2 years from now? I don't know. I don't have the crystal ball. I do know that
there's already rent inflation, right?
We already have rent inflation, which we've been talking about in the D.C. metro area, is ridiculous. I actually, this is a good example. I just probably a year ago took a rental where I put it on the market for $2,000, a 2-level, 4-bedroom, 2-bath, single-family house for $2,000, and it rented pretty much right away. The same house, a year later, I now have it on the market for $2,250 and got a rental application within 1 day. Okay? That's ridiculous. So from $2,000 to $2,250 in 1 year. So just imagine if this continues at a certain point, who's going to be in control? It's going to be the investors, the landlords out there are going to drive the cost of rents through the roof. And if you haven't locked in your long-term cost of shelter by buying a home at a low 30-year fixed interest rate, you're going to be basically at their mercy.
And you're talking about general inflation from supply and demand, the rent's going up. But when general inflation hits, it impacts all prices.
Yeah.
So even, your wage, everything will go up, but your 30-year mortgage interest rate payment will not.
Yeah, and it's, right now, Lewis, there's a lot of people that have been calling and saying, hey, should I opt to maybe take a 15-year fix because those rates are even lower? And to me, I don't think you can lose either way, because you're just going to pay the house off further, quicker, and you're not even going to have a mortgage payment in a lesser period of time. You only have taxes and insurance to keep up with. But, it doesn't matter to me really which one you take. I do think that it's important to sit down and analyze your overall situation to figure out what makes the most sense. I don't think it's just as simple as just saying, hey, this person should do a 30-year fix, this person should do a 15-year fix, this a 20-year fix. It honestly is different because everybody's cash flow is different. And the most important thing to me is to make sure that you're putting yourself in a position to succeed. Some people will opt to take a 15-year fixed, but that payment, while there's less interest charges, you're getting a cheaper interest rate. Your payment is much higher because the majority of that money is going to pay down your principal. Once you take out and you commit to that 15-year fixed, you're bound to that. You can't all of a sudden decide, hey, this payment's kind of steep. Can I pay the 30-year fixed instead? You don't have that option. So, you really do need to analyze your overall cash flow situation and figure out, okay, am I okay? Do I have enough funds to be able to make sure that I can make this payment every month? And, that's just the difference between the 30 and the 15. You also have adjustable rate mortgages, which are still products that are out there that have super, super low interest rates, depending upon your credit qualifications. That adjustable rate mortgages do make sense for certain people, especially investors that maybe only plan on holding a property for a year or 2 or 3. Those loans are for them. So never think that you just because somebody says, oh, you have to do a 30-year fixed because somebody, probably had a bad experience in the past that they took out an adjustable rate, it adjusted 4 or 5 times, they couldn't make their mortgage payment. Well, those cases are out there. And back when the whole real estate market busted, it was because, those people weren't able to refinance and take cash out to continue making their mortgage payments. That's why they're all upset. It wasn't because they had their situation analyzed in the beginning and determined that a 5-year ARM was suitable for them. They didn't do that. This was the cheapest payment at that point in time, and then 3 years went by, and it went by really fast, and they couldn't cash out to continue to kick the can down the road like the rest of the country was doing.
They didn't have the printing press to make up the difference.
Absolutely. So once that stopped, that's when everything hit the fan. So the soundest advice that I can give you at this point in time is just to make sure that you're taking out a mortgage that you can afford, and not just afford now, but afford for the future. And for everybody, it's going to be something different. If it's a military family that knows they're only going to be here for 2 or 3 years, but they really want to buy because they think that it's a great, not only to buy now and lock in their cost of home ownership, but to be able to maybe use that as a long-term investment down the road, it makes sense because they could ultimately, move in, 3 years later, move out and have their long-term cost of a mortgage locked in on that property. If they want to turn it to a rental later, then they can do that. But ultimately, like I said, I think it really is important to sit down and analyze your overall situation. Everybody's case is going to be different. 877-245-2030. That's 877-245-2030. Bottom line is, like I said, the interest rates that are all-time lows, and regardless of whether you're, right now you're renting or whether you're considered buying, the best thing to do is just to reach out to a professional and see what your options are, because at least once you have the options, you can make more of an informed, educated decision. We're coming up on the end of the show, guys, but I really appreciate you guys tuning in. Louis, I want to thank you again for coming on and your great insights. Where can people go if they're just starting their search all across the country? If they're looking, I know a lot of people are listening and streaming in online. If they're looking to start their home search and they're struggling to find a good real estate agent to work with, what can they do?
They can go to homegain.com and they can compare realtors anonymously. And when I say anonymously, it's not like you look at a list of realtors and, of course, they don't know who you are. You fill out a profile and we send it to a handful of agents with your request and what you're looking for in a real estate agent, and they make a specific proposal back to you, and then you can review that proposal, and if it makes sense, you can contact them. If you've got follow-on questions, you can ask through our anonymous process. You can send them a note through our system, and they'll respond to you. And so this way you get to interview 4 or 5, up to 6, 7, 8 real estate agents to figure out which one is best for you. And it makes sense to compare because this is a very large transaction. It's probably the largest transaction people will make, buying or selling a home. You need to have the right realtor, and if you use the HomeGain Find a Realtor product, you should be able to find one that suits you. You go to homegain.com. That service is available to you. You can also get a free home valuation and check out the many real estate resources we have at homegain.com.
Perfect.
Thanks, Ryan. Thanks, everyone.
Thanks, Louis. Guys, thanks again for tuning in. We'll be back again next Monday from 2 to 3 p.m. at WNEW 1580 AM. If you have ever any questions or concerns or real estate needs, the best number to reach out to me is 877-245-2030. That's 877-245-2030. Have a great week, guys. See you next week.